Well, with Capitec having wrapped up the South African banking earnings season here in South Africa, Kenyan banks impressing with their financial reports, and the Nigerian banks, despite stellar numbers, not igniting much activity within the banking sector. What's your view on the African banking landscape right now?
Well, I think when you look at the markets, there are different dynamics going on, Kenya versus Nigeria. So what we saw with the Kenyan banks were a very good set of numbers, as you said, coming off strong loan growth last year. So we saw banks growing their loan books 30%, 35%, 40%, and that's off a very strong 2010 base as well. And also what we saw was that the asset quality continued to improve in Kenya. So the bank's earnings benefited from provision unwinding. Their cost bases were pretty well contained. So at the bottom line, we had strong earnings coming through, which then resulted in very good ROAs and also in returns on equity. So in excess of 20%, and we are sitting with Equity Bank, for instance, with an ROE close to 34% now. So those are a very good set of numbers. It gets tougher probably for Kenya this year, given what we saw in the last quarter of 2011, where interest rates went up 1,100 basis points. That's bound to have an impact on how quickly you can continue growing that loan book. And it's also bound to have an impact on the asset quality. Yeah. So I'd say the outlook gets a little tougher for Kenya this year.
What does provide some opportunity, though, is the recent oil discovery we're seeing, because, of course, with heightened economic activity comes somewhat of a positive and a silver lining for the banking sector as a whole.
Yeah, I think that's true. I think that's more, it's not a near-term impact, so it's not going to really impact numbers this year, but we would expect in the more medium term for that to start being a major contributor. If you look at Nigeria, for instance, oil and gas, funding upstream oil and gas is a pretty big component of the bank's loan books. So this could also become an important sector for the Kenyan banks. And you're not just talking about just the oil drilling itself, but also all the services related to the oil service companies and the drilling, and So I think that could become a good driver for Kenya.
In the interim, quite a few interesting headlines that hit the markets this week, in terms of how banks over in Kenya are pursuing growth strategy until those oil revenues come on stream. I mean, Equity Bank, one of those making headlines, where it signed this 8.3 billion shilling loan agreement with the IFC, and that to expand its exposure within the agribusiness sector and SME sectors specifically. What do you make of developments like this? Because it signals a growing trend locally, which is seeing banks preferring possibly to look for funds from international financiers moving forward.
Yeah, I think there are two things that are happening there. One is that some of these international financiers, like the DFIs, recognize that there's not enough lending happening in key sectors of the economy, and that's usually at the low end. So whether you're looking at SME or agri. A tendency we tend to that we see across sub-Saharan Africa is that agriculture accounts for maybe 30%, 40% of GDP, but when you look at the breakdown of loan books, it's sitting at about 5%. So obviously it's not getting its share of lending. And these initiatives are specifically targeted at increasing lending to these sectors so that you can encourage growth. Because it is a major employer of people within our continent, and we would like to see it grow. So that's on one side. The other side, from the bank's point of view, as they go into SME or they go into microfinance, that's really to exploit a market that has been largely untapped. The problem with everybody wanting to bank the big corporates, whether it's an MTN or it's the brewers, is that those margins get squeezed because you're all bidding for the same business. So in order to try and improve your margins and grow your loan book, you've got to look at sections of the market which have been untapped. And again, that's SME, agri, micro loans, consumer loans, and that's driven not just the Capitec story, but also like the Equity Bank story.
Absolutely. I mean, if there's one bank that stands out in Kenya in terms of targeting the unbanked and getting it right, it is Equity Bank. In the meantime, over in Nigeria, there's a caution, it seems, about sustained asset growth without robust government forms still over in Nigeria, and that despite the fact, that we've had AMCON's operations having improved the fundamental outlook for that sector on that end.
Yeah, and I think we've gone through a large cleanup in Nigeria. If we go back to the middle of 2010, the sector NPL ratio, non-performing loans, was sitting at 36%. So that's over a third of the books, which were literally bad. And by the end of December last year, we were down to 4.95%. So a big cleanup has happened. AMCON has injected $25 to $30 billion into the sector, by either buying out these bad loans, injecting capital in some of these failed banks. And that is a large amount of money. So we are quite confident that this year should be a better year for the Nigerian banks. We've seen 2 years of cleanup. They have taken large write-offs. The numbers being reported now, some of them are not great numbers because of these write-offs that were taken in the last quarter. But some banks are producing decent numbers. If you look at Guaranty Trust Bank, came out ROE of 22%, strong growth at the bottom line, I think 30%. That's a pretty decent number.
Yeah, looking at that, I mean, where this asset quality is certainly improving over in Nigeria. Yes, we're waiting for confidence to filter through, on the back of that. But does it make these banks more attractive for potential acquirers? I mean, what are you making of that potential for M&A activity to happen in a big way over in Nigeria?
Well, I mean, we saw some M&A activity last year with EcoBank, ETI buying Oceanic Bank. We had Access buying Intercontinental, and we had FCMB buying FinBank, and the consortium buying Union Bank. So we've already started to see M&A. I think we will continue to see consolidation in that sector. We know that some banks are still looking at getting a footway into Nigeria. When you look at the South African banks, for instance, Standard Bank, First Rand, they all talk about the importance of being in that market. So Standard Bank is already in that market, but is probably looking to ramp up. So I would say we would continue to see opportunities. The issue then becomes, what do you buy and how much will you be expected to pay for it?
Exactly.
So I think marrying those two is where we probably have an issue.
Well, we'll have to get you in at a later stage to take a look at how investors, actually tap into some of this opportunity that's cropping up on the African banking sector. Certainly, EcoBank CEO, one of the CEOs that's talked about consolidation on the sector, in a big way over in Africa. Thanks so much for joining us today.
Thank you.
Of course, Nothando Ndebele is head of research over at Renaissance Capital.